Thanks again, Tom, for having me back. It's become an annual feature and something I look forward to, especially with a sort of crowd like this. So, I've been thinking about our job really is to try and forecast the future as difficult as that might be. But to know really where we are going, it is important to first be clear as to where we have been. And I find that often there's confusion about that too. But if I were to really look back at the history of the post-World War II, what I find fascinating is that every decade there is some theme which captures the imagination of the world. And what's even more fascinating is that once that theme becomes well understood and sort of too hyped up, in the subsequent decade that theme almost never works. So we have this sort of recurring pattern where something sort of captures the imagination of the world one decade, and then the next decade it doesn't. So we have to be very wary of something which sort of captures the popular imagination of everyone. And what do I really mean by this? So if you look at it, last decade, the big theme in the world was the rise of the BRICS, the emerging markets, right? So that was what the hype was all about. You got one acronym after another coming out to try and capture the rise of the rest in terms of how rapidly the emerging markets grew last decade. In fact, in the entire course of economic history, last decade was the single best decade for developing countries in terms of their growth rates. Between 2003 and 2007 in particular, the growth rates of developing countries was over 7% on average. And we have never seen an era like that. And at the peak of it in about 2007, for the first time in history of all the 200 countries in the world, basically every single country grew. And there were only like a couple which didn't grow. I think Fiji, Fiji or something, basically who cares, right? So basically everything grew, like apart from maybe two very small countries. I hate to say that. So everything grew.
Killed our Fiji audience.
So in terms of, that was a fascinating thing. The 1990s similarly were all about technology in terms of NASDAQ, the tech mania which swept the world. The 1980s was all about Japan. We tend to forget how much hype there was about Japan in the 1980s, that the political campaign in this country in the late 1980s and early 1990s would all about be Japan. I still remember this very famous line. I think it was Paul Tsongas, in the former senator, who had a line that the Cold War is over and Japan has won, because it seemed that whatever Japan did, nobody else could do. And at the peak of their sort of prowess in late 1989, the Japanese stock market alone accounted for nearly half of the world's global stock market capitalization.
Wow.
Japan, right? 7 of the 10 largest companies in the world in 1989 were Japanese, mainly banks. So that's how powerful Japan was in the 1980s at the peak. In the 1970s, it was all about natural resources, gold, oil, all these countries which were sort of, into that, really benefited. The 1960s was about America and the go-go stocks here, the Nifty 50, about the growth momentum out here. And the 1950s was all about Europe's comeback after being debilitated by the Second World War. That's what it was. So every decade, as you see, there was one big theme which captured the imagination of the world, particularly in investment terms. Last decade has been, or this past decade rather, which is not over as yet, has clearly been America's decade. And why do I say this? There are many metrics which suggest that. For one, the American stock market has been by far the best performing stock market in the world. In fact, the performance of the American stock market over the past few years has been so outsized compared to the rest of the world that today the American stock market trades at a 100-year high relative to the rest of the world, or close to a 100-year high, which is about as much data as we have, as far as data goes. That's how much the American stock market has done well. The American economy has also been doing really well. In fact, by many measures, the American economy hasn't done this well as it's done over the past few years. In terms of that, we have about the lowest unemployment rate in history. We have close to the lowest inflation rate still in history, and like about the highest consumer confidence in post-World War II history and highest small business confidence in post-World War II history. So that's how well the American economy has done and the American stock market has done. As a result, what you have today is that the American economy is still about 25% of global GDP, but the American stock market is 55% of global GDP, a 30 percentage point gap. So as a financial superpower in particular, America has never been this powerful on many metrics, whether it's the stock market or it's to even do with the US dollar. The dollar has never been this widely used. In fact, today, 88% of all transactions in the world involve the US dollar. 88%. So that's what makes US sanctions, financial sanctions in particular, such a potent weapon, that every time you have to sort of impose sanctions somewhere done by the US, it's impossible for any other country to avoid not being hit by that. And this is where I think that China has really underwhelmed as a financial entity, at least. China's, as we know, its economic rise has been incredible. It's sort of gone from being a very tiny player in the global economy to now being the second largest. Its share in the global economy is about 16% compared to the United States at about 24, 25%. But in financial market terms, China has in fact regressed over the past 2 or 3 years. In terms of a couple of metrics here. One, that the share of the renminbi in global foreign exchange reserves today is basically 1%. The US dollar is close to 2/3. That's how dominant the US dollar is. Similarly, if you look at the share of global transactions, how much of that is done in the RMB, that number is still minuscule and has regressed, in fact, since 2015, once China imposed capital controls to try and stem the currency's decline that year. So as an economic power, you've had an amazing rise of China. But as a financial superpower, China has sort of regressed in the last 2 or 3 years and remains a very tiny player compared to the United States. So this has been America's decade in every which way. In terms of economic terms, for sure, although there you can argue China obviously has done really well as well. But in financial terms, America has dominated almost like never before if you use metrics such as share of foreign exchange reserves held in US dollars, share of transactions done in US dollars, the share of the American stock market done in the global market capitalization. And China has been a major laggard compared to its economic might in the global economy. But as I said, that every decade when a theme becomes widely understood and becomes very popular, you know that is the time to pivot away from that theme. In fact, as someone gave me this great line that the time that when you become too comfortable with something, it's time to panic. And so that's the mantra that I always follow even as an investor, which is that when you become comfortable too much with one particular theme. So for me, the really big sort of trend that I think is going to play itself out over the next decade or so is that we could be close to peak America in terms of the fact that America has done so well this decade despite the political narrative which hasn't captured that, because that makes it look as if this country is sort of not doing that well and stuff. But whatever else we may think, we could be at the climax of this trend. This decade has been building up into sort of America's decade, and the last year could be the climax of this trend. And why is that? Well, that's because the last year has been exceptional for America in many ways. The only economy in the world this year where growth has accelerated is America. Almost every other economy in the world this year, including those in Asia, growth this year has disappointed or decelerated. Almost every economy I can think of out there. And the reason why this has happened in America is because you had the tax cuts, you had other policy changes which were made, which basically sort of took a trend and further levitated that. But the sugar high of those sort of trends could now start coming off from next year. And I think that's why even the markets here are beginning to sort of sniff that and panic about that. So the big strategic sort of advice that I'm giving to people at this stage for whatever it matters is that it's time to pivot much more internationally. The American stock market is 55% of global stock market capitalization, but the American economy is 25%. The gap is 30 percentage points. The last time there was such a large gap was really between Japan and the Japanese stock market and the economy in the late 1980s, when the Japanese stock market, as I told you, was about 45% of global stock market capitalization, and the Japanese economy was just about 16% of the global economy. So peak America is something which I think is a fascinating theme for me and something which could play out next decade. And so Asia and many countries in Asia could possibly sort of benefit in the shadow of that as that trend plays out. But first, to be clear, this has been a very disappointing decade for Asia from a financial market perspective, at least. So if you look at it, this decade in dollar terms, Asian stock markets have produced a negative return. This decade, entire decade I'm talking about, whereas the American stock market has nearly tripled in value. That's the dichotomy between these two regions over the last decade or so. And in economic terms, too, I feel that what happened was that after the big boom of the last decade, many of these economies have had to spend a lot of time cleaning up the excesses that were built up. In China, a lot of the excesses are still there in terms of the massive debt buildup that we've spoken about. But it's not been just restricted to China. India is still dealing with a massive sort of, non-performing loan problem in its banking system. You have other countries also dealing with excesses from Indonesia to even Turkey, which were all built up last decade following the incredible boom that happened. But that could be now in the cleanup phase out there. So for me, that is something which represents the biggest opportunity as we look forward to the next decade. And then I'm going to make some specific points here about, like the big global themes out there. One thing that we were speaking about as we walked in here had to do with, like, everyone's now very focused on March 1 or April 1. We don't know exactly what the date is, as always, but somewhere there. Then what's going to happen? Is the world going to fall apart after sort of, if a deal doesn't come through, or are we all going to be very happy once a deal comes through? As you can know,
U.S. and China.
Yes, U.S. and China, in terms of, the big agreement which is supposed to come through. And sentiment on that oscillates wildly. Everyone woke up to Monday morning thinking that, some sort of a deal is there. And here we are on Thursday morning with a lot of gloom, following the arrest of the person, Huawei's CFO last night. And there's a lot of gloom that, oh boy, this is about to all collapse. And I just want to put this in perspective out here. For me, the big trend is this, which is that from about the 1970s right up until last decade, we were in an era of hyper-globalization. By hyper-globalization, I mean that the world was getting interconnected at a furious pace. And there are sort of four metrics that you can look at this. One has to do with trade. Trade as a share of global GDP expanded massively from the 1970s right up until last decade. Capital flows between countries expanded humongously in the 1980s, 90s, reaching a crescendo just before the global financial crisis of last year. Migration flows also expanded. And then the fourth one, digital flows, the interconnectivity that we saw in the world because of the rise of the internet and the flows that took place online of information. But what started to happen this decade is, and this is very important, this predates Trump. Trump, for me, is not somebody who is sort of, a person who's facilitating deglobalization, but somebody who's a symptom of it. Because if you look at all these four metrics had began to go into reverse gear well before Trump came into power. Trade as a share of global GDP has been declining this decade because various countries are putting up more and more non-tariff barriers or tariff barriers well before Trump came to power. Capital flows as a share of global GDP have declined a lot this decade because of the fact that banks have been much more reluctant to lend cross borders following the 2008 financial market meltdown. Migrant flows have slowed down. We know this very well. Even between US and Mexico, migrant flows have slowed down considerably. And fourth, even on the digital side, we're seeing a sort of balkanization of the internet as well, which is the fact that China is sort of forming its own universe and its companies trying to sort of form their own orbit, making more investments into countries from India to Indonesia as they try and sort of match up to the big tech giants of the United States. And if you go to China today, it really is a completely different existence. you cannot use any of the sort of daily sort of apps that we use here, or things like Google, Facebook. Everything out there is banned when you go to China, and they have their own universe, and like in terms of how they do things and what they use, as you all well know, and they're pretty happy with it in terms of pretty self-sufficient with that, at least from what I can detect out there. So it's quite incredible that, like we talk about digital like interconnectivity, and yet this balkanization has happened between these two sort of powers out there. So I think that no matter what happens in March or April, I feel this trend of deglobalization will last for a while, because that's the natural ebb and flow, which is that you get a very powerful trend of globalization, and then you get some backlash to it. And that backlash is what Trump is a symptom of in terms of what's happening across the world. So I think that lasts. We saw a similar sort of hyper-globalization take place in the late 19th century, and then in the interwar period, we saw a massive sort of retreat from that in what was an era of deglobalization. I think we are in a similar era which started just after the global financial crisis, and something which is likely to last for a while rather than end with one trade agreement or one trade deal, even if it's struck in the optimistic scenario between US and China in March or April. Now, I think that as far as Asia is concerned, as always, you will have some winners and losers in this. But one increasing theme that I'm finding in Asia, especially when you talk to US companies, and this is something which could have like important implications, is there's increasing talk about how they want to set up bases now, not just in China, but they want to diversify, because they know this tension, or they have this sense this tension is not going to end anytime soon. So the big beneficiaries of that, countries like Vietnam, countries like Indonesia, countries like Thailand, we are already seeing that supply chains beginning to move. The first signs of that are already beginning to move. Vietnam has been, like the mini China in terms of its manufacturing success story over the last decade or two. It's already done really well out there. In fact, I tell all my Indian friends there who sort of keep cribbing about the fact that, how we are, how things are sort of falling off, and they're not being able to benefit anymore from manufacturing, that countries like Vietnam and all are still doing very well on that front. But I think that the supply chains, we're seeing people tell me that the supply chains are beginning to sort of move, or people are beginning to set up factories now more in places like Thailand, Indonesia, Malaysia, to diversify their risk away from China out there. So I think that's one big theme out there, that, as they say, when two big elephants fight in the jungle, a lot of tall grass gets crushed, but there are also people who benefit. And I think that looking for the beneficiaries of the trade war is what I'm trying to sort of do out here as far as Asia is concerned.